So one of the questions I get a lot is, why do I have to care about the interest rate for this particular car that I'm purchasing? And the reason is because the car that you're buying is a diminishing asset. The minute you drive it off the lot, it's going to be worth less than it was the day that you bought it. And interest is something that compounds over time. It will take, if you have a high interest rate on a car loan, it'll take many years for you to pay off even the principal. The interest is what you pay first. So what happens is, in the end, if your car is in an accident and totaled, you owe more money than the insurance company is going to pay you for that car. It's critical that you think about the total amount that you're going to have to pay. Now, when you go into a car dealership, the car dealer's salesperson is going to say one thing to you: how much can you pay each month? That's all they want you to think about, is what your monthly payment is. But your monthly payment means nothing in the end compared to the overall amount that you're going to have to pay on the car. A monthly payment of $300 a month might be affordable to you, but what if it's for 36, 48, or 60 months? It's critical that you know how many months you're financing the car, because at that interest rate, that's what's going to blow up the total amount that you're going to pay for that car. When you sign a retail installment contract, you'll see boxes across the front of it. It'll show you what the APR is. That's the annual percentage rate. That's your interest rate. It'll also show you the amount financed, the amount of the down payment, and finally, it'll show you the total amount that you're paying for that car. You need to look at that last box and think about it. The dealership wants you to think monthly payments. Your job is to think, what am I really getting into here? How much am I really paying on this car? Is it really worth it to me to pay that much money for this car?
What if it's not worth it? What do they do if it's not worth it?
If it's not worth it, you shop. You need to shop for credit. The reason why these contracts are given to you with the boxes that are in them, the reason they're all regulated by the federal government. It allows you to shop for credit, to go to another dealer and say, hey, that guy was going to finance this amount of money at this interest rate. I want a lower one. Most people don't realize the minute your pen comes off that paper, you're obligated. There is no rescission right. There's no right to cancel in most consumer purchases. So the minute that pen comes off the paper, you're done. You do not want to sign unless you're comfortable and unless you've already shopped to make sure you've received the lowest interest rate.
Thank you. What's the downside? What happens if you pay too much, either through the purchase price or the purchase price plus the interest rate? What happens down the road? What do you see with your clients?
Often we see when you have a high interest rate and a long-term loan, that when the car is worn out and is no longer running, or when the car is in an accident and is paid off by the insurance company, my clients still owe money. They still owe money on that loan. Even though they had full coverage and the car was totaled, the car wasn't worth what the loan was worth. And the same thing is true if the car just wears out. And cars with high mileage will just wear out. Anything can go wrong at any time with a car.
So you talked about shopping for a car. People know how to go to different dealerships to shop for cars. What did you mean about shopping for financing? What did you mean about that?
The tricky thing about shopping for financing is that you have to get the dealer and the finance entity with the dealer to tell you what the interest rate is going to be and what the exact terms of the loan are. Those are normally kept from you. They don't want to give you that information until they think they've got you hooked and it's time to sit down and sign the contract. So you have to talk to them about what the interest rate is early on, and you have to realize that when you're in that room and the finance guy gives you the paper, you don't have to sign it. You can pick it up and walk out the door and say, I'm going to go someplace and see if I can get it at a better interest rate.
Thank you.